There's 900,000 insurance agents, and there's only 300 of them that are trained on this, and I'm one of them. I'm going to teach you, if it's okay with you, how you can make more money and sell more deals by knowing some cool information that no one else knows. Anybody ever read the book Start With Why by Simon Sinek? No, it's a great book, but I always start off with why so that you already know what the purpose is. And so typically when people buy homes, they're either gonna mortgage them or pay cash. Right, those are kind of the two options that anybody's ever gonna look at, and that's all that everybody knows. But what we do is we teach people a third option. And so typically if you're saving up money, it's pretty much the American dream to save up for a long time and then go put all your money down on a home and have a nice family and the white picket fence idea, and then you're back down to zero. All right, and then you got to do it all over again, and when you end up go buy a car or send your kids to college, and you're constantly in America, we're constantly saving up money and using it all, saving it up and using it all, and very few people end up building wealth long term. And by comparing to cash and finance, what we do when we're buying properties specifically for investors, your investors can increase their cash flow and increase their money 90% year over year, increase their IRR on their properties, on their returns up to 40%. And because it's life insurance, they're also going to leave behind a tax-free death benefit to their family that'll increase their net worth and their legacy over 700 times. That you can't create that anywhere else. And so when you're investing, it's creating this money where you're growing money into a life insurance policy and borrowing against it. And by doing that, you're continuing to grow your money forever without depleting your cash position. And how do you do that? Leverage. Life insurance allows you to leverage money, and most people don't know about this. Most people think of a typical life insurance policy where you pay $40, $50 a month and your family gets a couple $1 million when you die, and that's the end of it. All right, and so for what you do with being able to help your clients buy more properties, this frees up a lot of cash flow for them so they can buy more properties, and it'll allow them to increase their returns, so they're going to love you more because you help them do this. And I promise you that nobody else knows this stuff. There's 900,000 insurance agents. I don't know how many realtors there are in the country, but there's 900,000 insurance agents, and there's only 300 of them that are trained on this. And I'm one of them. And what is it called? It's called the infinite banking concept. This guy right here, this book, Becoming Your Own Banker, this guy right here, Nelson Nash, pretty much discovered this process in the 80s when interest rates were super high. And he was teaching his friends and family how they can buy properties and buy cars without having to finance from the banks. Because at the time, interest rates were in the teens and people were spending more money on interest than they were on their home. Which today, even at a low interest rate, when you buy a house, you're still paying more on the interest than you do on the actual purchase price originally on a house. And we have a major challenge in America because we're always faced with this interest. And for investors, they're always looking to figure out how can I balance my returns with the debt service that I'm going to have on a property so I can still put more money in my pocket. And this guy pretty much figured out a way to be able to utilize life insurance to be able to do that. The whole idea of infinite banking, this is straight out of the book, the whole idea is to recapture all the interest that you're paying to outside banks and financiers, like the mortgage companies, the banks, everything, and be able to put all of that money back into your pocket so you can finance all the things in your life. A lot of people use this for cars, for weddings, for real estate, for being able to live their day-to-day expenses. And like, we financed our wedding from our life insurance policy. I'm buying her a car because we're moving to a new office at the end of the month with cash from my life insurance policy. And I don't use my own money for anything. And all I use is borrowed money from the life insurance policy. And really the objective is to keep all of the money flowing back into your family. And so for everybody that's buying a home that you work with, their biggest pain, everyone's biggest pain is money. It's because you work so hard and the first thing that you do is you give all that money to somebody else. And we don't realize it today, but what you do every time you get paid, everybody in here, when you get commissions, it just goes wires right into your account, right? You don't even realize it, but the first thing that happens is all of your money goes into someone else's bank, and then they lend it out to 9 other people. And you never really get to keep your money. Even though you open up your bank account and it says that there's some money in there, that's not your money. The bank owns your money until you go use it. And it's not like they take the 100 grand that you make and keep it over here safe and secure for you. And when you go back, they reach into your safe deposit box and give you your cash. They're giving you someone else's cash from someone else that just came in a second ago at the bank. That's the truth. That's how the banking system works. And so if really understanding it, it's the biggest problem in America. It's not that we're printing money. It's not anything beside that banking is an evil situation. And we mortgage everything in our lives. And how many, on a percentage basis, just to have an idea, what would you say is the percentage of 100 of people that are buying with a mortgage versus paying 100% cash that you guys work with? Huh?
Yeah, it's high.
80% mortgages, right? All right, so
Really high.
you know that's a challenge. I don't know if you've watched old movies, but before the 80s, it was like a curse to mortgage your house. Like, if you watch movies about these situations, people didn't want to mortgage their home. People would leave their husbands because they went to the bank to mortgage their house. It was more of a situation that you bought a home in cash, and if you got into a pickle financially, you would mortgage your house to get money on it. Now we do the opposite, because all Americans care about is that monthly payment. And for you to be able to have something where you can free up cash flow and improve not only the feeling that a family gets when they move into their own home, but also be able to free up their financial situation through buying a property without using their own money, it's going to set you apart from any other realtor out there. This is really the process that we teach people, and this is pretty much what your clients would do, is they would get a cash value life insurance policy, specifically a whole life policy, and put their cash into the policy. So if somebody's buying $1 million home, which I know is going to be impossible around the Grove in a year or two, but if somebody's buying $1 million home, they're going to have to put 200 grand down. They probably, just like this picture before, they're probably saving up for a long time to have 200 grand so they can go buy their dream house with their family. And instead of just putting that down, you're going to put that cash into a life insurance policy. Now, I know it sounds crazy, but this allows you to borrow cash from the life insurance company, and it's almost like a home equity line of credit, where you're putting cash into a property, you're building up equity in the property, and you can borrow against the equity to go do whatever you want. You're putting cash into a policy to build up equity in your policy to borrow against it to do for whatever you want. And when you go use that money, the borrowed money, the loan, has no repayment terms. So you don't have a monthly payment, you don't have an annual payment. It'll just accrue interest for the rest of your life if you don't ever pay it back, and your death benefit will pay the loan back when you die, and your family will get the difference. And so it's a loan that requires no payments, and that'll free up thousands of dollars a month of cash flow for the people that are buying homes with you.
But so what's the typical interest rate on that?
Typical interest rates between 4% and 8%. It depends on the carrier. Every carrier that we work with is 4 to 5%. But again, you're not paying it on a monthly or annual basis. Yeah.
Is this for every insurance company, or is this like specific to certain companies that offer this?
Yeah, great question. Every whole life insurance company has this ability. But very few people are structuring policies in a way that allows you to maximize the cash in the policy. Because typically if you go to like a New York Life or Northwestern Mutual person, which they're the two biggest companies in our industry, they don't design policies for cash. They design whole life policies where you're going to put as little money as possible to get a death benefit that won't expire. And does anybody in here have a whole life insurance policy? Cool. So if you did, you would realize that after years, you'd barely have any cash. Like, you wouldn't be able to do this without it. And there's some, like Northwestern and New York Life also are an 8% policy loan. They get their money. A lot of the carriers we work with are 4 to 5.5. And we work with the companies that have the lowest loan rate and the most flexibility for them to be able to do that. Then they can take that money and invest it in a real estate deal. They could use it for anything. I always say when I'm on a call with somebody, you can use this money to pay for your kids' college, to buy real estate, or come visit us in Miami. I say on every call. Yeah.
How long do you have to have the policy for in order to borrow from it?
10 business days.
Oh, really?
That's it. Yep. And so I'll show you some examples and how our clients have used it before in a second. And you know, once you invest in a property, if it's your single family home and it's your primary residence, you're not going to have returns unless it's an investment property. It works great with investment properties because you have cash flow coming in. Otherwise, you don't have cash flow coming in, you're paying for a mortgage, right? 80% of people are paying for a mortgage. So by doing this, it allows you to put more cash in the policy, which allows you to invest more, and take those returns, and you keep doing this. Our best clients are taking cash every single month from their policy, buying more properties, taking the cash flow, putting it back in, and doing this over and over again. And that's literally what I do with my own money. Every single time I get $1, I put it into my banking system. That's why it's called becoming your own banker. And banking is the most important business in the world. No matter what your returns are on a property, even if it's an Airbnb and you get good returns, the person that makes the most money is the banker. Every single time. The bank makes the most money for everything that you do. If you buy a car and it appreciates, or you buy a house and it appreciates, or you buy Bitcoin and it appreciates, the person that makes the most money is the banker. And so we teach our clients how to be the banker themselves so they can take all that money and put it back in their pocket. So typically when you utilize money, you take all your money and you put it in the bank, and then you go spend money on your expenses. This half is what every American does. You make money, it goes in the bank, and then you spend money and you got a little bit left over, hopefully. We teach people to take their money, put it in the bank, and move it into your bank, which happens to be a life insurance policy, and then borrow against it, and then go spend money on their examples. Yep. And so what this does is it creates cash flow and creates freedom and liquidity. Instead of liquidating your money every single month and living paycheck to paycheck, you're actually leveraging every single dollar that you make and creating dividends in the policy and whatever you just bought. So you're growing 5 to 8% dividend rate in a life insurance policy and 8 to 15% or whatever your returns are on your real estate investment all at the same time. It allows you to use tax-free growth and have access to money, protect from market volatility. Life insurance is guaranteed never to lose money. I don't know if you guys follow the market at all, but stock market, S&P 500, NASDAQ, Bitcoin, Ethereum, every single market this has been the worst month since 2022 and lost trillions and trillions of dollars in the market. That will never happen with a life insurance policy. And the real crux of it, beside this fancy schmancy stuff about using the policy, your family also gets money when you die. And people overlook that. That's the most important part at the end of the day. The other stuff is sexy, but your family, your wife, your husband, your kids, something happens, they need money to be able to sustain their lifestyle. The life insurance policy depends on your age, your gender, and your health. But the reality is, we have policies of people putting in $100 a month, and then I'll show you a policy I'm working on right now. The guy's already putting $10,000 a month into a policy. So it just depends on the financial situation. But ideally, you have a place. Right now, again, you don't realize it. You don't think about it this way, because Nelson Nash is all about rethinking the way that we think. But the first thing that you do with all of your money, 100% of your money, just goes immediately into someone else's bank. And then JP Morgan or Wells Fargo and all these companies get to use all your money to go lend it out and charge interest to other people. Like that. This is saying, why don't you take all of your income? You're still going to have to move it through your bank. But why don't you put it into your banking system that you own, that you can now finance everything in your life and never have to worry about those guys and owe money or owe debt to anybody ever again. And that's literally what we do. We've helped our clients pay off their debt. I got one couple right now that moved $60,000 into a policy, borrowed $50,000 of it, paid off their credit cards, paid off their 2 cars, their credit just went up 150 points. Then I helped them, connected them with my credit funding guy to get them 0% interest credit cards, and now they're growing their business and more than they would otherwise. It allows you to free up everything. And hypothetically speaking, if you had a bank and you owned a bank, how much of your money, what percent would you want flowing into your bank? All of it, right? Just like growing up in the restaurant business, every time I needed a cheesesteak, I went to my dad's place. I would never go to somebody else's place, right? It was like a curse if you're my friend to go to Jimmy John's or Jersey Mike's. You can't do that. The same thing would be true with your money. But you take all of the money that you work so hard for every single month, and the first thing you do is go give it to somebody else. And then you have to go beg them for money when you need it. When you want to achieve your dreams, you have to go prove that you can afford to do it.
So funny, so true.
It is so true. And you have to show them all this. I'm asking you for access to my money. Why do I have to show you my financials? Why do I have to prove what I'm doing to you? Why do I have to do that? They control your money. You give your money to somebody else immediately, and they control all the money in the world. And one of the golden rules that he talks about is that whoever has the money controls the rules. And that's why we have poverty and financial challenges. 58% of Americans live paycheck to paycheck, including a third of people over $250,000 in income. Especially in Miami. I talk to our team all the time. Grant Cardone says you got to teach your team how broke they are so they work harder, all right? The reality is we live in America, so it's easy to understand how money can go like that. We live in Miami, and so we have an opportunity now to take back control of our money and teach your clients how to do it. All day long, we're cold calling and reaching out to real estate investors. This works best for a real estate investor because they are going to have the cash and the cash flow to be able to benefit the most from this. But yeah, nobody in our office has savings accounts. Even if you have a high yield savings account right now, like I have one also that I think has $2 in it from American Express. And I don't know if you have one. Does anybody in here have a high yield savings account? Yeah, how many emails over the last year have you gotten that says it's going down from 4.5 to 4.3 to 4.2 to 4.1 to 4 to 3.9 to 3.8? And if you have a decent amount of money in there, you're going to get a 1099 at the end of the year to pay taxes on the interest that you just got. So your 4% is really 3%. And they're just lying to you and deceiving you with money. Where you could put your money into a life insurance policy and get a guaranteed 4% every single year no matter what, and use all the money without depleting your cash. And it's all tax-free. Like if you have 100 grand in your high yield savings account and you need to buy a car for 50 grand, how much money do you have left over? You have 100, you use 50, what's left? 50. If you have 100 grand in your policy and you borrow 50,000, how much is left in your policy? All 100. It just stays there, growing dividends, because you're not using it. Just like when you take out a HELOC, you're not chopping off a piece of your house and giving it back to somebody. You're just leveraging it. It's collateral. And the same thing works with life insurance. Yeah.
What are the qualifications, though, to be eligible for the life insurance? I mean, you just go to the doctor and they make sure you're like somewhat healthy, and then you're. Yeah. You know.
Yeah, I mean, there's different health ratings. Kind of, just think of it the same as a mortgage based on your credit. Your mortgage rate's based on your credit. Your life insurance premiums based on your health. So, and it's hard, just like in a mortgage too. It's hard to like decline. If you have bad credit, they'll just give you a jacked up price. You have to go find alternative financing. All right, for this, like we got a guy that's like, really, really unhealthy. But you got it proved it's just 3 times more expensive for him than it would be for somebody else. The way that you shortcut the time period is by having some extra cash and savings too. If that person has $500 a month and they have 10 grand in their savings account and they put that in, they can take up to 90% of that 10,000 right after 10 business days, or some companies are 5, like a week or 2. Yeah.
So if you don't take advantage and do that.
Yep. Then it takes a couple years. Yep. But life insurance is a long-term game plan. It's something you're going to have for your whole life. So, and if you put $500 a month into anything and you don't have any cash, whether it's the market or a savings account, no matter what, after a couple years, you're still not going to have much. Yeah. So it's just about leveraging the money more.